welcome. You're watching Business Today Television. This is Market Today. I'm Sakshi Batra. Well, it's Friday and a very important day of trade as well, as all eyes will be on the RBI's monetary policy, wherein Governor Shaktikanta Das will be unveiling the first monetary policy of the fiscal year FY25. Now, as far as the stock markets are concerned, yesterday on the weekly options expiry, we did see a very choppy trade unfold, but we also hit an all-time high level on the Nifty. We now have 22,600 as a reference point. Although this was intraday, a lot of choppiness followed. We did see the market slip into the red at one point in time, pull up again. Despite several pulls and pushes, the Nifty managed to close above 22,500. In fact, it was an 80-point gain on the weekly options expiry, but the most important point is that of those 80 points gain that you see on the screen on the Nifty as of yesterday, 76 points really came in from HDFC Bank. That has pulled back very smartly, and after that Q4 business update, that gave us a very strong reference point on the kind of deposits growth that the company has reported. Now, for the week, the Nifty is still up about 1%. It's set for the third straight weekly advance. Whether or not that will happen today is something we will keep an eye out on. Now, as of Thursday, we also saw the broader markets. The mid-cap index is up 3.5% for the week and maybe set for the best week since September of last year. Small cap index, which has gained for the 10th straight day in a row, is now up over 6% for the week, which will be the best since January of 2021 for this index. So what's really next? And of course, the Nifty Bank that's come back into the limelight, 48,000 now by our side as far as the Nifty Bank is also concerned. And this is largely led by HDFC Bank. Will the other private banks also pull in shape and pull up the Nifty Bank? Well, most of our experts yesterday did say that for this entire series, it will be Nifty Bank that they will be keeping an eye out on. So the question is, what should be your investment strategy? On the one hand, looking at the trade setup that we are, and also the macro front, the RBI policy, and what indications will that bring in? We will come to all of it. And joining us is a very special guest to help you navigate through these macro data and micro data on the markets. Kiran Jani, Head of Technical Research, joins in. He's from Jainam Broking. Welcome, Kiran. Thank you so much for taking the time out for this discussion. Tell us, how did you make of the markets? What did you make of the markets yesterday when we saw a smart pull in the markets, of course led by HDFC Bank, that's been so far a big laggard? What does it tell us about the tenor and the texture of the market going forward from here?
Very good morning, everyone. First of all, thank you very much for having us on the show. Now coming to the market, as we are knowing that
recording in progress,
there are multiple things are going on. We are hearing multiple news and multiple views from the global market about the interest rate and the Feds giving multiple statements. First of all, they ask us, they have delivered the statement like we going to have a 3 rate cuts. Now, since last week, we are hearing that there will be a only rate cut after June only. So Dow Jones is at a critical zone. We have seen that 39,000 has a very big resistance, and now Dow Jones has start falling from that level. And currently, the setup suggesting us that there are chances that Dow Jones can touch 38,000. The similar fashion we are seeing in at our market also. However, the broader market is into the very good phase. But we are seeing that some of the large cap, we are seeing some profit booking also, like IT space and all. Now coming to the RBI policy, we supposed to have RBI policy today, and we're going to hear from our governor that what going to be a stance. There are chances that we are also keeping unchanged only, and it will priced in also. So, but volatility will be there. So we definitely have to understand the volatility. Now coming to the charts perspective, the option data suggested that Nifty and Bank Nifty both PCI ratio above 1. It is suggesting that both indices into the bullish zone. Secondly, we have seen yesterday the volatility. However, Nifty has created the support from 22,300 to 22,350. Now there is a tug of war at 22,500 to 22,600. We are seeing that on 22,500, 64,000 call writers are available, whereas on put sides, 22,500 put writers are holding more than 71,000 lot. So put writers are pretty strong. So until and unless after RBI policy, if market sustain below 22,500, we can see some of the profit booking will happen. But after policy, if market keeps sustaining about 22,500, then there are chances we will see some short covering rally towards 22,600. Now coming to the Bank Nifty is in underperformance comparing to the Nifty. Nifty is trading at its all-time high, whereas Bank Nifty is still below its all-time high. So there are chances of this catch-up rally. You already highlight about the ICICI Bank, Kotak Mahindra Bank. So those private banks are now into the rally, or they are into the mode to catch up this rally to cover this underperformance. So we are quite bullish on Bank Nifty. So we just have to keep an eye on after RBI policy. If Bank Nifty also keeps sustaining above 47,800, then there are chances that we can see some target towards 48,500. So trading perspective, if any dips come towards 47,800 to 48,000, we would like to go buy. Our first target is 48,300. Once market cross 48,300, we can also see 49,000 kind of a target. So we are bullish on both the indices. Buy on dips would be the strategy for the day.
Buy on dips is the strategy for the day. Let's also welcome our other guest on the show. Mayuresh Joshi now joins in. He's the head of equity research at William O'Neill India. Warm welcome to you, Mayuresh, and thank you so much for taking the time out. Big day today, RBI policy in the offing. Larger expectations around status quo for the 7th straight time. But what is the street really expecting from RBI governor this time?
Morning, Sakshi. Morning, Kiran. No, very frankly, as you pointed out, expected to be a status quo policy, and the commentary itself is expected to be neutral as well. So I think what RBI will probably look at is how data points are moving along on the domestic front, inflationary numbers, specifically core inflation, with the risks that are attached to it in terms of the heat wave as an example that we're probably seeing. There is a high probability that if the heat wave continues, reservoir levels which are already low might get depleted further. So whether that has an impact in terms of food inflation going forward, what is the progress or the initial estimates as far as the monsoons are concerned, whether we will see that La Nina impact taking place for this monsoon season as well. Fingers crossed for that we have a normalized monsoon, and global conditions as well at this point of time. So to that extent, status quo largely, but markets might probably react in terms of how crude is behaving, what is happening on the geopolitical front, and a lot of volatility on all these aspects put together.
Okay, so a lot more factors that the markets will be looking at as far as the commentary of the governor is concerned, on monsoons, on crude oil, on geopolitical waves as well. So all of these factors will be important as well. You did talk about crude. Now there are expectations, some estimates coming in that perhaps we'll see $90, $95 coming in soon. Is that a big headwind for us right now? Because it's been largely comfortable. We've seen re-rating happen in both segments of the oil and gas, beat upstream and downstream over the last few months odd. How is this likely to really play out going forward?
So to a large extent, Sakshi, I think the expectation was that $75 to $90, that's a broad range that crude will probably move around. It's close to reaching the higher end of the range. Obviously, the optionalities that India as an economy has in terms of buying cheaper Russian crude at this juncture, that still remains on the table. So to that extent, the quantum of purchases that we probably do if crude still starts going northwards might still have a reasonable amount of lesser impact as far as the current account deficit is concerned and our trade payments are concerned with this option that we probably have. But with crude staying higher, obviously I think the expectations in terms of the spiraling that happens across different sectors cannot be ruled out. In an election year, again, if crude stays higher, the optionality in terms of cutting prices, taking that little bit of a hit as far as the exchequer is concerned, so as not to pass on the prices. And as a corollary, I think what happens in terms of oil and gas companies in general, they might take a little bit of that hit in terms of numbers as far as Q1 and Q2 are concerned. So a spiraling crude is definitely not a good sign in terms of how an economy is poised. But we have optionalities on the table, and let's see whether this stays.
Okay, we'll keep an eye out on that. Mayuresh, I'll ask you on one stock and then we will move on to understanding which are the top stocks that you and Kiran both are looking at. HDFC Bank, the way it sprung back after the Q4 business updates yesterday, contributing maximum of the gains on the Nifty. Is bottom finally in place? Is the underperformance done and dusted? Is HDFC Bank now on course for higher returns and finally coming out of that bottom leg?
So in my opinion, I think the worst is probably over as far as price action is concerned for the bank. The update has been very, very encouraging, specifically in terms of the higher single-digit deposit growth that we probably seen, because that was one of the sore point that the bank was going through. The other element in terms of the entire merger dynamics that have been taking place onto their balance sheet, HDFC obviously has low cost element in terms of deposits that they probably have. And therefore, I think the trajectory in terms of how NIMs and spreads will move, the expectations in terms of revenue synergies building in. And obviously, I think as cost synergies start building onto the balance sheet as well, a large expectation of the market in terms of a steady improvement in terms of core parameters for the banking structure as a whole, including the mortgage business taken from HDFC, should start playing in the right direction. So I think the quarterly update is in the right direction. The sustainability factor is something that the street will now look out for. So you will get a good reaction onto the stock like you saw yesterday as well. But in my opinion, still, I think at O'Neill and Markets with India, we still feel that the stock is probably stuck in a range. Maybe a quarter's numbers after this, the commentary, and one more quarter will definitely give it the re-rating that it probably requires. But it has to come out of this range, break out of that key pivot level that we are looking at. But the worst is probably over, in my opinion, as far as price is concerned.
Okay, let me bring in Kiran also to give us that technical view on HDFC Bank as well after yesterday's bounce. What are the charts really telling you, Kiran, on HDFC Bank?
Seems to that 1390 and 1400 is a very good cluster support, and on risk reward point of view also HDFC Bank was a good buy at that particular level. Now considering the current market price chart, we are seeing that HDFC Bank has given a breakout from its ascending triangle pattern at level of 1470. Now considering that particular ascending triangle pattern, there are chances that we can see price target towards 1560, 1570. At current juncture, we have seen yesterday prices has closed above its 100 days moving days average after 3 months. So it is also a considerable, a very good sign. So any dip towards 1500 would be the good buy. We would like to keep a aggressive stop loss of 1490. And considering that this daily price chart, there are chances first target of 1560. And once 1560 cross, then there are chances that on daily price chart we are seeing a one gap towards 1600. So there are chances we can see price target of 1600. So if anyone is okay to give a time frame of 2 to 3 months, they can definitely hold HDFC Bank or any dips towards 1500 would be the good buy with the strict stop loss of 1490.
Okay, Kiran, at the same breath, if you could highlight two stock ideas that you will be going with today.
Yes, so we are recommending two stock, one from the IT space. Now Persistent, we are liking very good at current market price. Reason being, the Persistent is giving a breakout from the falling trend line, or we can also say there is a falling channel breakout on Persistent. We are seeing some short covering based on the derivatives data also, and momentum indicator has formed a bullish divergence also. So Persistent closed above 4000 level, which was a strict resistance for Persistent. For past, now we are expecting price target of 4090, and we would like to keep a stop loss of 1380. So Persistent is our first pick for today. Second is the Rainbow Children. If you check the Rainbow Children, it's a mid-cap company. On daily chart, we are seeing a bullish rounding bottom pattern breakout. There was a cluster resistance of 1350. Now, since last 2 days, stock price is close to 65. If you check intraday charts, there is a cup and handle pattern also. So multiple bullish pattern we are seeing on Rainbow. So it is not for the intraday also. Sure. If you you can also carry for the positional way also. So at current market price, one can go long, keep a stop loss of 1340, and for the target of 1430. So Persistent and Rainbow Children are both are the picks.
Persistent and Rainbow Children. Mayuresh, your top two stock ideas for today?
So I think we'll go with the larger mid-cap and Markets with India, and what we really like is Pidilite India at this juncture. Two things happening. One, I think in terms of the core EPS RS ratings, as we see it at Markets with India, are extremely good for Pidilite. The second aspect, obviously, is the entire perspective in terms of institution holding and the cancelling parameters that it fulfills. Obviously, I think as a proxy to real estate, and real estate going through a 6-year cycle, being in the third or the fourth year, Pidilite becomes an appropriate proxy. Volume growth has been very, very strong in excess of 10 odd percent, standalone EBITDA margin in excess of 25 odd percent as we speak. Input costs have come off over the past few months and expected to remain so. And therefore, margin sustainability might still remain on the cards and improvement thereof as well. as operating leverage kicks in. Obviously, the product profile that they probably have in terms of new houses coming up, the use thereof, sealants, industrial sealants, industrial paints and chemicals, all of them should move in the right direction, and refurbishment of existing homes as well. So to that extent, I think the expectation in terms of top line growth still continues to be very strong balance sheet that they probably possess at this juncture as well. So Pidilite is something that we continue liking at this juncture. The other momentum pick that we probably have is within the hotel space. Juniper Hotels is something that we like. The Grand Hyatt properties, which is well spread out in terms of top end, which is the Grand Hyatt itself, more than 900 odd rooms. Then the mid-premium segment through Hyatt Regency, which is almost in excess of 700 odd rooms, and the upscale hotels, which have almost 120 odd rooms. So to that extent, I think it's got an appropriate product mix at this juncture. A large element in terms of the EBITDA margin performance is very well given. 38-39% over 9 months FY24, expected to remain that way. The average room rental for the last quarter, almost 10,900 odd rupees. For 9 months of this year, close to 10,000 odd rupees. And therefore, I think as occupancy inches up, they're almost 74-75 odd percent. As that catches up with the best quarter which will come at this juncture, this is this quarter Q1 and Q4 as well, elements of that should be seen there as well. It should inch higher in excess of 75-76 odd percent, creating that natural operating leverage that we probably expect to see. Stable numbers on the top line, double-digit growth expected for the next 2 years. Stable margin performance, as I said, which means positive bottom line growth going forward as well. So Juniper is something that we like. Obviously, since it's a momentum trade that we are carrying, being a growth investor, the stop loss placed on this trade is around 475. There is some lock-in which is getting released as far as ESOPs are concerned, which will have some element of supply onto the stock.
Okay, Pidilite and Juniper Hotels, the recently listed stock, 2 stock ideas by Mayuresh. Let's quickly look at what the pre-opening trades are hinting at. Record high, ladies and gentlemen, is what is being indicated in the pre-opening levels. 22,650 by side as far as the Nifty is concerned. I wish this is true as and when the markets open, but a strong momentum, 130 points higher as far as the Nifty is concerned. Let's also pull up Nifty Bank in the same breath to see how that one is moving in the pre-opening trade. And HDFC Bank, that's the first counter that we'd like to look at for looking at whether there is further buying happening on HDFC Bank. Yes, there is in the pre-opening trade, 2.6% higher, 1567 currently on HDFC Bank again today. We'll continue to keep an eye out on this one. Let's also look at the other heavyweight counters, Reliance Industries. Let's look at that one as well and see how that one is moving in trade too. And of course, we'll pull up some of the IT heavyweights as well. 0.7% of an up move on the Reliance Industries counter, 29.46 currently. Let's also look at Infosys, TCS, how that is moving in trade as well. About a 0.5% increase on Infosys right now. That's the way that one is moving. Let's also look at Tech Mahindra, TCS, all of these counters. Slightly softish move on TCS right now. But let's pull up some of the stocks in the news focused list. Let's look at Nestle. Remember, there's the final nail in the coffin that's gone in for Nestle as the National Consumer Dispute Redressal Commission has dismissed the 2015 government complaint in favor of the company, where they had sought damages of about 650 odd crore rupees and wanted to noodles as far as Nestle is concerned, but that's not happening, and you can see some sentimental up move. So the company has moved on, and now the courts also seem to be moving on from this news finally. 25.79 currently on Nestle. Ultratech Cement, that's the one that I'm watching out for. Remember, the company has commissioned about 100 megawatt AC solar energy project in Rajasthan, so that could be a further news that one should follow. 10,000 odd flattish trade right now on Ultratech right now. Let's also look at some of those real estate majors like Sobha. That's come up with the strong business update. Total sales value of 1,504 crores on Sobha Limited. You have Prestige Estates that's bought another land in Bengaluru. This is the second one they have bought in Whitefield again, and that could be something that one can look at. About 21 acres of land in Whitefield, Bengaluru for 450 crores is what they have taken at this point. 2.7% increase for this one as well. Some other updates coming in on Bajaj Finance business updates. So that's the heavyweight counter that you need to look at. FY24 AUM is up 34% at 3.3 lakh crore rupees for the non-banking finance company. We'll also keep an eye out on these stocks. Let the markets settle, but let's come to Kiran. Kiran, anything that you look at in the pre-opening that you'd like to highlight? What has caught your attention?
So overall, the way HDFC Bank is moving, one more private bank we are like to highlight, there is ICICI Bank. If you
Okay.
check ICICI Bank, there is also trading at 20 days moving average. We are seeing that ICICI Bank is trading at the lower bottom of its rectangle pattern. Yesterday, there was a very good rebounds from lower level. So ICICI Bank is catching our eye. If it is keep trading above 1080, then there are chances ICICI Bank can touch 1100 level. So keep your ICICI Bank on your radar. Anything above 1080 would be the buying entry level price for the ICICI Bank. Keep a stop loss of 1060. The first initial target is 1110. Once 1110 is crossed, then there are chances we can see positionally 1150 in upcoming times.
Okay, staying with the banking space, Mayuresh, the other banks that have come out with the business updates are Bandhan Bank and also IndusInd Bank as well. And there are brokerage houses reports that have come up with Nomura penciling in 275 target on Bandhan Bank. Jeffries even more bullish, 290 target prices what they have given. They do believe that the deposit growth is strong at 25% odd, and of course collection efficiency has improved to 99%. These are some of the triggers that they believe for the bank. On IndusInd Bank, Morgan Stanley has given an overweight rating with the 1925 kind of a target price. Anything from these particular second rank private sector banks that you'll be going with?
I think the updates have been relatively strong, and it's across the spectrum. So whether you talk about large banks like an HDFC, a federal bank had given good numbers as well, or the second rung NBFCs as well, including a Suryodaya. You saw good updates from L&T Finance as well. So to that extent, I think no complaints. But largely, I think what will transpire is post a scenario where rate cuts will come through in the second half, the system will benefit as a whole. Having said that, our take is the banks like IndusInd Bank as an example. I think the growth has been pretty strong even in the previous few quarters. Obviously, in the scenario where rate cut starts coming through in whatever proportion, it does help and aid the NIM and the spread trajectory of the bank in general. They've maintained a very tight leash in terms of their credit growth, in terms of provisional operating profits, and the targets that they set, they're almost achieving all targets that we probably have on all these parameters put together. So this is one bank that we continue holding on to our global portfolios. The other bank that we'll keep on our watch list is ICICI Bank. Stable set of numbers from that major as well, and expecting a steady show to continue going forward as well.
Okay, keeping an eye out on ICICI Bank as both our guests are bullish on that one, and of course a whole host of other second-rank private sector banks as well. I wanted to ask you, Kiran, on the real estate space, this has been a clear outperformer, and the way the business updates are coming in for them, a lot of sales updates, they are pretty robust. Even mid-cap names like Purvankara, that's showing some uptick today, about 5.5% in the pre-opening trade. Macrotech developers came out with strong Q4 business update as well. We've been looking at a whole host of others like Prestige Estates constantly on an uptrend. How are you playing some of these real estate names that are in momentum right now, Kiran?
So overall, if we check Nifty reality indices, it has given a breakout from recent consolidation, and it is taking a very good support at 900 level. So there are chances if real estate indices keep holding 900 level, then there are chances we can see upcoming time 950, 960 kind of a level. And during this time, there are chances that mid cap real estate pace can give us a very good level, very good return. The SOBA has already moved. So as of now, enterprise. If you check Brigade Enterprise, there is we are seeing there is the falling trend line breakout and stock price is trading above its all moving averages. So there are chances Brigade Enterprise can give us a target of 1000 plus. So at current market price or any dips toward 940 would be the great level to enter. Keep a stop loss of 920 and we are likely to see target of above 1000. Another stock which you highlighted, that's Lodha or Macrotech developers. If you check its daily chart, then it is trading into the rectangle pattern. Prices have retested recently its 100 days moving average, and after retesting 100 days moving average, it is started trading into the heart of high bottom pattern. So Ludha is again a very good setup at current market price. Anyone can go long at current market price of 1140, 1130 level. Keep a strict stop loss of 1100, and if the prices keep holding 1100, then there are chances upcoming time we can see price target of 1200. So Brigade Enterprise and Macrotech both are their preferred pick.
Okay, fair enough. That's as far as microtech developers and other real estate majors are concerned. Let's look at one more stock, Rashi Peripheral, that's shot up about 8-9% odd in trade. It's got new orders, about 1,510 odd crore rupees from NMDC data center, and that's really led the stock to move up very strongly in trade. Kiran, would you have a view on this momentum? Would you chase it?
Which stock we are discussing?
Rashi Peripheral.
Rashi. Okay. So
Yeah.
on daily price side, we are seeing there are some fall to from 380, 390 level. Since then, we have retested its 300 level. After that, on intraday chart, we are seeing some rounding bottom formation is going on. Data is too limited. So if anyone is holding this particular stock, keep a strict stop loss of 310. If prices break 310, then there are chances prices can again start falling. So as of now, we are holding a neutral stance at current market price. Keep a strict stop loss of 310 and don't chase particularly this stock. If you are holding this stock, hold this stock with the stop loss of 310.
Okay. Mayuresh, let me come to you. I remember the last time we were discussing Nestle, it was just before the stock split were to take place, and that bite of yours really got viral on our channel when you had spoken about Nestle and explained as to what the split really means for all the viewers and how should one really view it. Finally, just like I pointed out on the news flow, that the final nail in the coffin is done and dusted. So the Maggie issue is finally history in the books of Nestle, with the National Consumer Dispute Redressal, coming out with has dismissed the 2015 complaint of the government and has come out with a favourable order as far as Nestle is concerned. At 25.75, is Nestle still something that investors can look ahead for a long-term wealth creation starting from this point?
So they should continue holding, and it's It's no longer a cheaper stock, right?
Yeah.
I think it was. So valuations have always been expensive for Nestle, but I think the premise was always the expectation in terms of their product profile. As you rightly pointed out, Sakshi, I think a big overhang is gone, done and dusted. And even now, I think it's a proxy in terms of whatever happens. So Maggie is something which is probably consumed by urban households in a far greater fashion. On top of that, I think they've got a good product mix. So you've got a chocolate mix through KitKat. They've got the Cerelac combination in terms of newborns as well, and more products expected to come our way. So to that extent, I think steady volume growth, steady margins, steady cash flows expected. Valuations always have been at a premium. So anybody holding on can continue holding on. It trades above key moving averages as we see it. It's got a very stable EPS rating, which is something that we like, and a very stable ownership in terms of institutions as well, which is a good sign for the stock as well. So anybody holding on should continue.
Okay, but what about the larger FMCG space, which has been a big underperformer? Because, now upcoming, you were talking about in your early commentary, we'll be all keeping an eye out on monsoon. And of course, that augurs well for, rural consumption at large. So the FMCG play is something that everybody keeps an eye out on. But the business updates from players like Dabur is again softish. How would you really look at the entire FMCG story right now?
So I think this quarter and the next quarter, and in fact, the last 2 quarters actually for the space as a whole, leaving aside a couple of players, so the volume growth has been very, very disappointing, and for obvious reasons. Because of deficient monsoons, rural discretionary spending is on the downside. And obviously, I think that will remain that way as well. Now, with the heat wave coming up, with what is expected, I think that consumption story still might remain on the downside as far as a lot of these FMCG players are concerned. Rural is a big part of FMCG growth, Sakshi, and rural accounts for more than 55-60 odd percent in terms of the overall volume consumption. So if rural is down and expected to remain so, at least for this quarter, the next quarter as well, the only respite and hope is normalized monsoons and a good recovery in the second half. Let's again revisit that point that valuations are not cheap for any counter within the space itself. So the markets will comprehend softer numbers expected to continue for the next couple of quarters. And therefore, a price and time-wise correction will continue for the space as a whole, at least till we see normalized monsoons and a good recovery happening in the second half.
Okay, we will have to wait for the recovery to really happen because valuations are still stretched. So till the time the numbers really prove themselves, FMCG could be a pain point as of now. But let's wait for the markets to hit open. In the meanwhile, I will just tell you what the markets have settled at. It looks like Nestle is going to be seen as the top mover on the Nifty when the markets hit open, and flattish trade is what I'm expecting as far as the Nifty is concerned, about 0.1% of a downtick on the Nifty. Right now it's settled about 28 points lower in trade at as in what how Gift Nifty was really indicating. Yes, so we do have the opening levels. It's an open in the red, 22,450 right now, 70 points lower as far as the Nifty is concerned, about a 0.2% lower trade as far as the Nifty Bank is concerned, 47,920. That's 140 point of a downtick as far as the Nifty Bank is concerned. Sectorally, the action remains limited to real estate at this point in time, and perhaps some uptick coming in on the media stocks, but rest of the sectors have opened with a red as far as the markets are concerned. On the Nifty, you have Nestle that's opened with a 0.6% uptick, HDFC Bank that's opened with a 0.3% uptick, Power Grid, NTPC, Shriram Finance, SBI Life Insurance. These are some of the stocks that are opening with some green ticks coming in. On the FNO space, it's the life insurance space again, ICICI Prudential, that's opened with about a 2% uptick right now. The broader markets flattish with a negative bias, 0.07% of a downtick on the Nifty Mid Cap 100 index. The small caps also lower in trade right now. Again, the action is shifting to some kind of action coming up as far as the PSU banks are concerned. We do have some more names coming up on the Nifty. So you have Bharti Airtel, IndusInd Bank, Divi's Laboratories, pulling up in trade as far as the top movers on the Nifty is concerned. You also have Tata Consumer Products that's opening with some higher ticks as far as the markets are concerned. Bajaj Finserv is the one that's opening with about 1/10% higher in trade right now. Dr. Reddy's Laboratories. So some healthcare names and diagnostic chain names that are looking positive as of now, but the larger breadth of the market seems to be on the declining side as far as the markets are concerned. And limited move as far as HDFC Bank is concerned, heavyweight counters are concerned. Let's look at Reliance Industries and see how that one has opened, if that is lending any support in the opening trade for the markets. 0.4% uptick for HDFC Bank at 1533. That's where it has opened. But Reliance Industries, let's look at that one, 0.4% of an uptick. So 2937, some bit of green ticks coming in on that one too. Let's look at Bandhan Bank, where a lot of brokerage houses have given an update, and IndusInd Bank as well. Both of them are opening with some green ticks coming in. Real estate players, Prestige Estates also opening into the green, about 2% higher in trade. You also have Puravankara, that's probably opening about 4.5% higher in trade. Let's pull up that one too. That showed an important a positive trend in the pre-opening trade. So Puravankara, yes, 3.7% uptick for that one. Let's also pull up Macrotech Developers in the same breath and see how that one has opened in trade too. Prestige Estates, we've already highlighted, 2.3% higher in trade. Limited action, NSE advances now about 1177 with the declines at 768. So the market breadth is still towards the positive side, but looks like the major markets are actually trending just flat with no action coming up. Kiran, anything else that's caught your attention in the opening?
So overall market is in very choppy line. Considering that RBI policy will be there, we are likely to see the pharma sector. We are like Sun Pharma. Sun Pharma is trading at the higher level of its rectangle pattern. Recently, it retested its 20 days moving average, and the stock price has already taken a support from that particular level. So Sun Pharma or a pharma overall sector, as you also mentioned about the Divi's Laboratory. So at current market price, Sun Pharma, one can go long, keep a stop loss below 1600, and there are chances, if stock price keeps sustaining above 1600, there are chances we can see price target of 1650 in upcoming time. So pharma sector would be the flavor for.
Okay, the other important bit is the insurance space that actually is bringing up a lot of names today. Mayuresh, how are you looking at the action here? SBI Life about 1% higher, ICICI Prudential up 2% higher in trade, ICICI Lombard up in trade as well today. LIC is giving us some green ticks in the opening levels. What is next for this entire insurance basket of stocks?
So I think the major overhang which happened in terms of the surrender policies and the surrender value related to life insurance policies in general, I think that overhang is largely behind us now. And I think it will now revert back to mean in terms of how price action will determine how earnings growth will determine the price action. And therefore, I think within this entire pack, the product mix, the expectations in terms of your overall OPEX ratios compared to the overall balance sheet, And last but not the least, in terms of expectations of good premium growth, that is something that will keep all these players in focus. Obviously, I think the Jan to March quarter.
Mayuresh, by any chance, have you hit mute? We lost your audio in between.
Sorry,
Yeah.
sorry for that.
Yeah.
So I think the product mix is going to be extremely critical. How protection plans are shaping up, how the margins are shaping up, and specifically, I think the new business margins. So the VNB margins are dependent in terms of all these factors put together, and therefore within the pack, I think SBI Life is more appropriately placed. HDFC, ICICI are trying to bring in more products. But there will be an element of added expenditure that will be added, both in terms of commission payouts as well as the upscale element in terms of having a larger amount of or a larger proportion of sales from this product itself as part of the product mix. So I think SBI Life is probably having a larger share in terms of a better margin product mix. The bank assurance helps with SBI, the huge distribution network, the digitalization efforts, and the embedded value, along with the OPEX ratio, right, is one of the lowest in the industry. It's just higher single digits, around 7 or 8 odd percent, compared to other players which are at 18, 19, 20 odd percent. So I think that will give that added advantage in terms of earnings. So within the pack, I think SBI Life probably stacks right up in terms of our ratings and rankings as far as insurance players are concerned.
Okay, fair enough. So that's as far as the insurance basket is concerned. Some more buzzing stocks. So I'll take those with Kiran and ask him about the targets that one can look at. Avas Financiers from after the Q4 update is showing us some ticks in the green side, and the other one is Kalyan Jewelers. If you can look at both these stocks and tell us what are the next targets that one can really look at, and is this a momentum that one should be really following up on?
So actually, I was also tracking those stocks only, which are backed by the gold. So Kalyan Jewellers, Titan, even Muthoot Finance are in the flavor of the stocks because the way gold prices has given a good rally. So coming to the Kalyan Jewellers has already given a breakout from its ascending triangle pattern from 400 level, and considering that particular pattern, we are expecting price target of 470, 480 in upcoming time. So definitely any dips towards 420, 430 would be the good buy. For the Kalyan Jewellers, keep a stop loss below 410, and the price target which we are seeing is 480. Another stock which we like in this same particular sector, it is Titan. Titan is also trading at current market price. It is retested its 20 and 50 days moving average. It is also giving a breakout from falling trend line. And on intraday charts, we are seeing the cup and handle pattern also given a breakout. So at current market price, anyone can go long on Titan. We are expecting price target of 3900 in upcoming time. Keep a stop loss of 3700. So risk reward point of view also, Titan is at available very good price for the price target and the risk reward ratio. So Kalyan Jewellers and Titan both are the preferred pick.
Okay. Mayuresh, I want to draw your attention to the shipbuilder stocks. I remember our past conversations, and there is no let-up in the kind of rally that we are looking at here. Again, Cochin Shipyard, record levels and record run continues for this one. A very strong up move, even on a day like today. We can actually see the stock about 3.5% higher, 1106 currently. Mazagon Dock is up and about. We also have GRSE that's up. So the entire space is again buzzing in trade. Mayuresh, a lot of viewers would be like thinking that after so much of rally has already happened, is there still steam left, and would one be hazarding too much of a risk when one enters at these levels?
Obviously, they are elevated levels, and as we see it at the markets with India trading way above pivot levels, a lot of these stocks in late stage basis moving significantly higher from their 200-day moving average, and that is one warning sign that we see in terms of the stock peaking out, and most of these stocks are probably exhibiting that feature as well. Having said that, I think the structural part of the story still continues for them. Very strong order books, expecting more orders to come their way, good margin orders, and therefore I think the revenue visibility over the next few years might very well continue for these counters. The only risk, as I see it, is the execution risk, Sakshi, and a couple of quarters where execution probably is not at par with what the street probably believes in terms of the compounded growth that one looks at. And if for any reason execution comes off, I think the stocks can just come off quite significantly with the expectation that earnings might not sustain and in the way that the street probably fathomed or expected. So to that extent, I think execution risk on earnings is the only downside risk that you probably see, but that is the biggest risk as far as price is concerned. So fresh investors will have to wait it out. As I gave my rationale, I think it doesn't make sense because of both valuations being on the higher side and way above moving averages and late stage basis, which can suck up to any kind of earnings potential risk that can come through that can play on the price. Investors who are holding can hold on, but have your risk management tools in place and an exit optionality. If certain levels are getting breached with heavy volumes, you probably might want to have some element of profits being booked on these companies.
Okay, Kiran, any particular stock from this basket that still looks attractive, at least on the technical charts right now?
I prefer GRSC. Cochin Shipyard has already given a good breakout and it is trading at all-time high. GRSC is the stock which is trading into the a big consolidation zone. Last time we seen during September 2023, stock price has made a high of 900, 950. From that level, we have seen that stock price has retested its 100 and 200 days moving average twicely and made a significant low of 600 or 665. From that level, now again stock price is trading at 900. So there was a big consolidation zone since last 6 months is coming out with the good breakout with the volume. And momentum indicator is also trading into the bullish zone. So risk reward point of view, GRSC is available at very good level at current market price. Anyone can go long and keep a strict stop loss below 880, 870. Our first target is 970, and once 970 is crossed, then it will consider as another all-time high breakout, and we can expect price target of 1000 plus. So GRSC at current market price definitely can go long.
Okay, got that. Let's pull up again HDFC Bank for our viewers. The stock is up 0.8% at 1539, but there are large trades that are happening. About 164 odd crore rupees of large trade has taken place. 10.66 lakh shares have seen many block deals really taking place. So one will continue to watch out for HDFC Bank again in trade today. Very strong momentum is being built up. So that stock is something that you should not let go of when you are looking at the trades this morning. Apart from HDFC Bank, the other space that's buzzing, again, Kiran had pointed out that it's pharma and healthcare that he's interested in. And, the diagnostic majors, healthcare names, they're all springing up. Dr. Reddy's, Alchem Laboratories, Divis Laboratories, Ipca Laboratories. You also have Metropolis Healthcare, especially this diagnostic chain space is buzzing like how in trade today. Mayuresh, would you have a view on this space, and would you care to look at the momentum that's being built up here? Is this sustainable?
Might be, and I think you have to divide these players in the pre-COVID and the post-COVID era, Sakshi.
Yeah.
So I think pre-COVID was a lot of revenue that was inbuilt, which had a substantial uptake. Now in the post-COVID era, if you look at a lot of presentation for these diagnostic players, whether it's Dr. Lal's, whether it's Krishna or even Metropolis, I think a large part of expectations in the post-COVID era has been that the numbers have now stabilized. A lot of these companies have decent balance sheets with cash on their books. And the diagnostic space as a whole, if you probably look at the unorganized and the organized players, and you divide the entire spectrum in terms of hospital players providing diagnostics and standalone centers in a lot of major cities and towns, also having a strong presence, I think a lot of consolidation will take place. Again, I think specialized tests are where I think the bulk of the revenues and margins come from. And therefore, players who offer these specialized tests have a better say in terms of the overall margin profile. Having said that, I think the space looks pretty interesting with all these tailwinds coming through. But each stock has these individual attributes. Dr. Lal's has a large presence in North. They're trying to expand in the South. Metropolis is a large play in terms of the specialized tests. But it also needs to probably get into the more generic space to have larger volumes. And Krishna is a play in terms of radiology and the other elements as well. Krishna, again, a lot of centers coming up. So ROCs on those centers are very, very minuscule. But as these new centers start coming through, I think the consolidated ROCs will start moving up significantly higher with more municipal corporations expected to come through and more tests which are very reasonable compared to the larger players as well. So very interesting space which can do well in the next few years.
Okay, it trends to be interesting space and may do well. Kiran, can you pick up one stock from the diagnostic space that investors and traders, especially on the technical space, need to keep an eye out on?
So Dr. Lalpet would be on our radar. We are seeing
Okay.
this stock since last 5 days. Stock price is forming a flag pattern. Since last 5 days, we are seeing that Dr. Lalpet is taking support at 2260, 2250, and at upside, we are seeing that stock price has resistance of 2300. So overall, the chart pattern suggesting a flag pattern. The breakout is still pending, but the way the price is behaving and taking support of 2250, 2260, there are chances that we will see upswing in upcoming time. So Dr. Lalpay, at current market price, anyone can go long. Keep a strict stop loss below 2250, and we are expecting price target of 2350, 2380 in upcoming.
Okay, fair enough. Mayuresh, of course, when we are talking about a lot of important, events going to be unfolding themselves starting today with the policy, and then, of course, earnings seasons will start, and then the election season will be on. Any particular sectors that you are keeping on your top radar right now, building fresh positions in, where you do believe that even in this interim, amidst all of these events, these sectors would be largely unaffected and will continue their steady run?
So I think, in lieu of all the factors, in terms of geopolitical tensions, in terms of how the global economies are shaping up, in terms of their economic recovery, I think domestic cyclicals and domestic consumption actually will still remain to be on the focus area list. Obviously, I think if you're talking about domestic cyclicals, manufacturing, stroke infra, stroke capital goods will still remain on the radar. Obviously, a lot of capital good players have already given huge moves. The government capex, a very strong rationale is expected to continue quite significantly. As private capex starts kicking in, and the government keeps on increasing their allocation in terms of key areas within the spaces itself. The PLI schemes that have probably got announced for various sectors within the entire spectrum of Indian manufacturing, and the intent in terms of China plus one for a lot of global customers as well. I think this is what will keep this sector in terms of the limelight factor as well. Obviously, the sourcing that is required for backward integration has already started in real earnest. It will take time. So I think one has to give time in terms of this process to probably take place over the next few years. But as that happens, I think manufacturing infra as a theme will still continue. Now, within this, if you probably break up, you've got engineering stroke EPC players who can do well. Road companies selectively can do exceedingly well. Certain capital goods stocks on declines, pullbacks can continue doing well. And therefore, I think this entire spectrum and the associated elements within this can continue doing well. Real estate as a space, as I just mentioned, I
Yeah.
mentioned one stock within that, and ancillaries can do well. Now, real estate has done well in the 6 year cycle with developers doing well in the first 2 to 3 years. Now it's the turn of ancillaries and proxies to probably take its share, because as new homes start coming through, the refurbishment, the refurnishing that probably takes place is something that will have a huge kicker for all these stocks. So laminate players, ceramic players, a decent company like Middlelight can continue doing well. So I think domestic is the theme that can continue doing well, where earnings can stay good.
What about cement? Is that a space that you will continue to look at when you talk about large infra space? Because there is a thought process that perhaps the price hike is in the offing that may not happen ahead of election. So all of that overhang still remains.
And that might happen, but election is just a 2 month phenomenon now,
Yeah.
Sakshi. I think it's just a quarter's hit. But yeah, cement as a proxy to all these elements obviously comes to the fore as well. If you look at the capacities at this juncture, the additions which are expected to happen over the next 2 to 3 years, and the expected demand that will come through, it is a base presumption that utilization levels should exceed 75 odd percent, and might even head northwards in the next few quarters. If that scenario probably unfolds itself, there is a strong operating leverage that gets probably played out. There is strong volume growth that can continue. Realizations will remain steady and on an uptick as well. Input costs will remain manageable, and even if they go a tad bit higher, as demand starts coming through very, very strongly, it's a pass-through element which will get absorbed, and therefore reported EBITDA absolute number and a reported EBITDA per ton should have significant signs of improvement as well. A lot of companies have done a lot of work as far as their power consumption is concerned. So either waste heat recovery plants or internal power consumptions, which has reduced their cost quite significantly. Again, the presumption of crude pricing that we are speaking, right? If it's between 75 90, it starts coming off again. The logistic costs start coming off for a lot of these cement players. And therefore, I think this entire thesis works out wonderfully well for them. Valuations for a few stocks obviously on the higher side, trades above key pivot levels. But selectively, I think a few stocks like Ultratech, which has leadership position, which we like, something like a JK Cement, which has appropriate mix between grey and white cement, very strong dynamics as far as numbers are concerned, with all these factors in play, can be good plays as a proxy to the Indian economy. And so I think cement as a story continues to remain on the strong footing.
Okay, cement as a story remains to be a strong, promising story that we will continue to watch out for. Many thanks, Mayuresh, for being with us on this very special edition and sharing all that wonderful insight. And it's always a pleasure to host you on Business Today, and we truly value all your insight, as do our viewers as well. Many thanks for being with us.
Thank you so
Meanwhile,
much.
viewers, we will continue our discussion with Kiran. And Kiran, a lot of viewers are sending in us, their questions for you specifically. And this is on our YouTube channel. A lot of viewers like Vikram Rajput, Sandeep Pancharya, they're all sending in their stock specific related queries. I'll be really thankful if you can answer to them. So Sandeep Pancharya, I'll take your question first. He wants to know from you, RVNL buying level for the very long term. He has to buy about 1,000 shares, but he does not know when to enter. What would you suggest? Of course, railways has been a story that has really played up already too much, but then there is a lot of FOMO that happens. Many people still are willing to buy the railway story and stocks like RVNL. What would you say? Amid these dips, is there a buying level that he can buy 1,000 shares on?
So considering railway stock, RBNL has already performed very well, and there are chances that stock price can go into the big consolidation zone. So if you are okay to hold for the longer run time, then definitely you can buy RBNL, but at least wait for the level at a 100 days moving average. So 100 days moving average is trading at somewhere around 210. And current market price is 260. So any dips towards 200 would be the buy. So buy on installment or like an SIP. At current market price, you buy a few of like 10%, 20%, and at every dip you keep adding on whatever the size you wanted to add. So RBNL definitely till 200, it's a accumulation zone. And for at least 2 years to 3 years, if you are planning to hold, you definitely can hold RBNL. One more, I would like to highlight a railway stock. It is IRCTC.
Yeah.
IRCTC has given a very good return from 600 to 1,000 rupees. Even at current market price, the stock price has given a fresh breakout at the level of 900. So RVNL, apart from RVNL, if you want to have exposure in railway sector, then IRCTC could be the stock. You can enter at level of 950, 980. Give a strict stop loss below 940. And looking at current market price chart, we are expecting price target of 1100, 1200 kind of a level. So RVNL and IRCTC both would be the preferred pick. You create a portfolio like you keep some of the portion on RVNL and some of portion on IRCTC.
Okay, Sandeep, I hope that you got your question answered there. Not just RVNL, there's another stock pick from the railway space that Kiran has picked for you. So look at IRCTC as well to build your railways portfolio. Both of these stocks are good to be held at. Please do listen to the advice of when to buy these stocks and how to keep your stop losses in check as well. Vikram Rajput wants to know from you. In fact, I'll just take Gorak Dam Masti's question first. He wants to know on DCB Bank, what would you really say? Is that a bank that one should be really looking at? We've been discussing a whole host of banking names, but there has been some kind of a consolidation, a lull move on the DCB Bank counter. Is there a stock that we should look at?
So considering the DCB Bank price, the DCB Bank has given a breakout on its monthly chart pre-COVID, and after COVID, we have seen that DCB Bank has retested its earlier breakout level of 70 and 60. The strong base we are seeing on DCB Bank on monthly chart, the price target has formed ascending triangle pattern, and at the current juncture, definitely one can go long on DCB Bank. Recently, also we have seen a sharp correction from 160 to 110 level. The price target is still trading with the support of rising trend line. So at current market price, DCB definitely you can go long. Keep a strict stop loss below 110. And looking at current market, looking at overall chart and current market price, we are expecting price target of 160, 170 in upcoming 3 to 4 months. So if you are okay to hold 3 to 4 months, definitely you can go long on DCB Bank.
You can go long on DCB Bank. You know, there's one more question, and that's on HUDCO versus NBCC. We've actually seen this PSU stocks rally, unfold in front of us over the last 6 months odd. Historically, when there had been no takers for PSU stocks, they have actually surprised a large part of the street as well. And both the HUDCO and NBCC have also outperformed in the recent past. Between the two, there is a question that which one should one go for going forward from here?
So technically, definitely, Hudco is a better choice from Hudco and NBCC. Hudco is trading at the breakout level. The stock price already took 1 or 2 months of consolidation. During that consolidation, we can see that prices has formed the bullish divergence also. So Hudco somewhere around trading at 200 level. Keep a strict stop loss of 190, and you can buy at current market price for the target of 250.
Okay, so those are some of the questions that we've managed to take as far as our viewers are concerned. So in case you're also watching us live on a day-to-day basis, don't forget to write in to us on our YouTube channel and on the social media platforms where we can pick out select questions and direct them to our guests as well. How many ever we can take, we will try to accommodate all of them in our course of discussion as of now. Kiran, the other space that's again buzzing is the PSU banking story too. We don't fail to talk about this simply because of the kind of price tickets that these banks are being seen at, and the constant improvement both fundamentally and on the stock price front that these stocks have displayed. Nifty PSU Bank, how would you really look at the current set of the stocks here? Any one or two stocks that you believe can be seen as fresh entry points even from today?
So looking at PSU, Nifty PSU indices, if you can check the indices has taken 3 months of consolidation. Now the indices is about to give a breakout from that particular consolidation. Now during this consolidation, we have seen the shifting is happening from large PSU bank to the small PSU bank. So as of now, we are liking small PSU bank like Bank of India. If you check the chart of Bank of India, the triple bottom pattern is about to break out. Yesterday we have seen a big price movement. However, it won't sustain. It didn't sustain and came back to the where it's open. At current market price, anyone can go long on Bank of India. The price is trading somewhere around 146, 145. Go buy at current market price. Keep a stop loss of below 140. And looking at price chart, we are expecting price target of 160 to 170 in upcoming time. So from PSU Bank, Bank of India is looking very good.
Okay, well, last few minutes on the show, and I will just bring your attention back to the pharma and the healthcare space because that is the one where all the action is in today's trading action. Let's pull up Indoco Remedies. There's been a constant chat on Indoco Remedies on our channel, especially by our guest, Mr. Chokalingam, who's been talking about this stock as his most favored stock. He did talk about it as his preferred list of stocks on the holy basis as well. He did talk about, holy to next holy. This is the stock that he wants to watch out for. 6% higher on Indoco Remedies right now. SMS Pharmaceuticals, Leica Laboratories, there is a strong move unfolding on all of these stocks as well. So just wanted to make a mention, Torrent Pharma, Natco Pharma, these are the kind of stocks that are again pulling up in trade. Anything else apart from the stocks that you earlier highlighted from the pharma space, Kiran, that you will be betting on?
Oro Pharma we are liking. So Sun Pharma and Dr. Lalpet we have discussed. Now another pharma from the pharma space we are liking, it's Oro Pharma. Oro Pharma is also given a breakout from his double bottom pattern. The stock price is trading above 1100 level. So at current market price 1130, 1121 can go long on Oro Pharma. Keep a stop loss below 1100. And looking at the chart, we are expecting price target of 1200 in upcoming time. So definitely Oro Pharma can be the stock.
Okay, Kiran, I'll just squeeze in one more question that's just come in after listening to our discussion on the railway space. Shankar Saxena wants to know that he's bought IRFC shares at about 160. Right now the price is around 145. Should he hold or exit the stock at this point?
So coming again, IRFC or RBNL, it has given a very good price range or a price breakout. So there are chances that we can see these particular stocks are trading into the particular consolidation zone for upcoming time. So I believe that one should hold this particular stock. Keep a strict stop loss at 120. I'm talking about IRFC. Keep a strict stop loss of 120. If price is breaking below 120, then you should exit, because 120 is the 100 moving average also. So keep a strict stop loss of 120 and keep holding IRFC.
Okay, keep holding IRFC. Well, on that note, thank you so much, Kiran, for being with us on this very special edition and navigating our viewers through a lot of sectors and stock ideas and the strategy on the index level as well. Appreciate your presence on Business Today TV as is always, and we'll get you back very soon to address all our viewers' queries as well. Many thanks to you and hope you have a fantastic day ahead. Right now, the Nifty is hovering about 0.2% lower, ladies and gentlemen. About 22,471 is the level at which the Nifty is hovering at. Nifty Bank has turned absolutely flat, but it's holding on to that 48,000 mark. It's the healthcare space that's been buzzing across the diagnostic majors, across the major pharma players as well, like Dr. Reddy's, Oro Pharma. We've discussed a plethora of healthcare, real estate stocks. We've also discussed in terms of the interest rate, decision that the monetary policy will be coming about. What will be the impact on the street as well? Several other sectors and stocks, especially on the defense, on shipbuilding and on railway space, and also on the PSU space, has been discussed on the show as well. With that, we will wrap up this edition right here, but do stay logged on. A lot of action will unfold starting 10 a.m. You will get to hear, the commentary of RBI Governor Shaktikanta Das on Business Today television, where he will unveil the first monetary policy of FY25. Thereafter, there will be a decoding of the RBI's monetary policy review as to what it really means for you. So stay glued on. There's a lot more coming up on your screens.